All right, guys, bang, bang. I've got Miss Polina here with me. We're going to try to do this for about an hour or so. I'm going to start off going over the economy real quick, kind of what happened over the past week or so. And then Polina is here to make sure that actually intelligent things are said. So if you can, before I forget, subscribe to the channel and click the like button. I keep getting hammered over the head. That's what you have to do so more people can see this. Let's jump into the economy. So it's pretty obvious, I think, one, that the economic data we're seeing or kind of the economic reality is much, much worse than what we're seeing in the stock market, for example. But there's been this dislocation between stock prices and economic reality. So in Q1, GDP went down 4.8%, a negative GDP there. We're also seeing unemployment kind of just falling off a cliff, right? I mean, literally, we've seen 30 million plus Americans file for unemployment in the last 6 weeks.
It's a lot of people.
Those 30 million people is the official number. So the unofficial number is much higher than that. You can think about this from the perspective of freelancers, gig economy workers, self-employed. Most of those people are not getting access to unemployment claims. And then on top of that, there's still people having trouble getting the unemployment. So over 30 million Americans, somewhere between 16 to 20%, depending on what the official number actually is, unemployment in the United States. And if you go back to the Great Depression started out with 3.1% unemployment. We had 3.5% earlier this year. At the end of February, we went from 3.1% in the Great Depression in 1929 up to over 20%. It took 3 years to get there, but within 3 years, we were over 20%.
And it took us 6 weeks.
6 weeks, which is going to be pretty bad, obviously. And so GDP is down, unemployment is skyrocketing. And then when you look kind of through that, the government has stepped in and they're trying to provide relief. And so the Paycheck Protection Program, or PPP loans, they basically said at first there's going to be $350 billion worth of loans available for small businesses. It's been a complete shit show, to be completely honest. We've seen everything from 200 plus public companies getting access to these loans to multi-billion-dollar companies getting access to the loans. And there's a lot of small businesses that are left hanging, right? Only 3 to 4% of the loans were actually processed in kind of the first wave. The government then approved another $310 billion of PPP loans. But my guess is that less than 15% of all loan applications have actually been processed successfully. And so that means that there's a lot of small businesses that are struggling. That then brings us to kind of the question of the moment, if you will, which is the health crisis is well understood in that there is a virus. It is infecting people. It is killing people. But I do think that there is a big question around, should we reopen economy or not? And so various states are starting to move into that right now. Some states are being more aggressive in opening the economy than others. But really the question is, how fast should we do this? Is now the right time? And what will be the impact of opening that economy? And I think that we can spend a lot of time talking through the various aspects there, but that's kind of the situation at the moment. And so maybe what we can do is, if you guys want, leave some questions leave questions in the comments here. I see you guys asking Polina to wave at you. And we'll try to do our best to answer as many of them as we can. What do you think about the reopening the economy?
So I think that we're headed in that direction. I just spoke with family in Bulgaria, and they're kind of slowly reopening. My aunt told me that as of today, you don't have to wear masks outside, only in indoor areas, and restaurants that have like a little outdoor area or like a terrace can open up.
So this is a really important point. What you're reading on the internet is a bunch of stupidity from the people who are taking these videos of the protest. So there's a lot of people who are out of jobs, 30 plus million Americans. They need income in order to survive. And they are out in the streets protesting, saying, open up the economy. And I think what we're starting to realize here is that there's a very big divergence between the social pressure, what is politically correct to say, which is stay inside, save lives, that whole narrative, versus the actual science. And to your point, what Bulgaria has figured out, and many other countries around the world, is that there's very little evidence that transmission happens on a frequent basis outdoors, right? As long as people
Well,
aren't sitting inside houses, right? Most of the person-to-person transmission is happening inside of apartments, inside of homes, inside of offices. And so if you're outside, there's really a much less need to wear a mask. And we should actually encourage people to go outside, stay away from people, but still go outside because there's less transmission that occurs there than inside of the home.
But what science did you read to suggest that?
Well, there's a number of studies. We can put them in the comments, right? But the whole point here being that what we are realizing is that the data that a lot of the decisions were originally made on is inaccurate, right? If you go back and look at everything from the Imperial College study to even more recent studies, there was concern that the death rate was 2, 3, 4%. Now, scientists, this is part of the process, right? As you come up with kind of a base case, a worst case, and a best case scenario. And so that's what they were doing. But the data is now telling us that the death rate, and definitely in the United States, is below 1%. So it's trending more towards the best case scenario rather than the worst case scenario directionally. And therefore, it's okay for us to change our mind when we get new information.
Right. So can I ask, if I'm a politician, what are the chances I change my mind based on new information and new facts if that pisses off my constituency?
Well, this gets to the crux of the issue, is we have bad leaders across the aisle. Both sides of the aisle, we are watching bad leadership. And I'll give you 2 examples. One is, it would be incredibly compelling for somebody to stand up in front of a camera, in front of an audience and say, we made the right decision at the time. We thought that this could be incredibly bad and kill a lot of people. We then overreacted intentionally and told everyone to get in their homes and shelter in place. That was the right decision because it was we prepared for the worst.
Because
and we hoped for the best.
Had no good information.
Yeah, or we just used the information we had at the time, which wasn't very robust. We now have more information and we don't need to overreact as much. And therefore, we are going to put a plan in place to reopen the economy in a safe and intelligent way, which includes 2 major components. One, we're going to reopen the economy. If you would like to go back voluntarily, you are welcome to do that. We would like you to wear a mask. We would like you to socially distance. We would like you to wash your hands, right? All of these different components that we know are really important. The second piece is we are still going to put into place things that will protect people. So there's 2 main constituents of people. One, there's a lot of people who aren't comfortable going back to work. They aren't comfortable going back. We will legally protect you. So if you don't want to go back to your job, we will make sure that they can't fire you because of this. They can't take away your pay.
But that puts a lot of pressure on the businesses, right? Because there's a lot of people who are in need of jobs right now, and telling a small business owner, hey, you need to keep this person's position because they don't feel safe going back to work, instead of hiring somebody else. Like, what do you do? So
we'll get to that in 1 second. The second group of people is the old, right? The elderly, the sick, or those with pre-existing conditions. We should shelter them in place, right? We should do everything to protect them. And the people who are not comfortable going back to work, basically what you then say is exactly what you're already doing. Most of those people have lost their jobs, right? And so what they're faced with, whether we like it or not, is, do I go make a living? Or do I actually stay
somebody
home?
Called you a communist in the comments, and I think that's the funniest thing ever, because
I'm probably the farthest from a communist that's possible.
Anyway, go on.
And so I think that we just have to be very intelligent in how we reopen the economy, and we have to get people back to work. Now, a key component of this is it would require a large portion of politicians to have the courage to stand up and say, hey, we did what was right at the time. We've gotten new information. We are now changing our mind. That's not what's going on. The second thing that's very telling is I am shocked that we have not seen a state governor step up and say, I have told the small business owners and the employees that work in my state that they need to give up their income. They need to give up their livelihood. I've shut down their businesses for public health reasons. I am shocked we haven't seen a governor say, I will forego my income until we get people back to work. And it's the whole idea of a leader should never ask somebody to do something that they're unwilling to do themselves. And it just feels like there's just this vacuum of leadership across local, state, federal level, and both aisles.
Because these are the conversations we have on Saturday nights. Yesterday, we were talking about the difference between power and leadership. And I thought you brought up a good point that the people we thought were powerful in this time of crisis, we find are not as powerful and in fact are not good leaders. So in times of crisis, you don't want power, you seek leadership.
Of course. And also, one of the things that we talked about last night that I thought was really telling is a lot of power is derived by people's position. And what that basically means is if I am the governor of a state, I have power because of my position, but that is authoritative leadership, right? Meaning that I outrank you, I'm in charge, you work for me, you do as I say.
Yeah.
When those people leave office, they lose all of the power. Right? The power is derived from the position. Instead, what we need more influential leadership, which is people are inspired to follow that leader because they actually believe in what that person is saying.
Yeah.
And they're trying to do it, just nobody believes them, right? This whole idea of like, we have to do this together or whatever. Yes, that was true when we didn't have information. Now that the information is coming out, everyone's looking around and saying, wait a second, this is nowhere near as bad as you guys want. And remember, the shelter in place was put in place because they were scared of overwhelming the hospitals.
Right.
The hospitals are not overwhelmed, right? Remember all of the things they did in New York.
They're scared if they loosen the restrictions that they will become overwhelmed again.
Potentially that's true. But I believe this stat is correct. We can double check, we can fact check it. I believe that for every one person that is labeled a coronavirus death, right? Labeled a coronavirus death, 500 people in the United States has lost their job.
But it's a death. I get what you're saying, but
now this brings to the question of, is it actually a coronavirus death? And this is my biggest problem, right? And again, what I'm about to say means that this could say that the situation is better or worse, right? We don't know if the situation is better or worse because the numbers are inaccurate. So anybody who understands data and math would look at this and say, right now in the United States, 60,000 people are being labeled as a coronavirus death. Here's what goes into that number. People who actually die from coronavirus, they're in that number. People who have coronavirus, they're infected, they've taken the test, they're positive, and then they die from something else. So if you have a heart attack, but you had coronavirus, you're a coronavirus death.
Yeah, but and then it begs the question of, did coronavirus accelerate your pre-existing condition, et cetera?
Absolutely.
But there's just a lot of elements.
But that means that there's questions on the data. The third bucket, which is the most egregious part that goes into that 60,000 number, is if you do not test positive for a coronavirus and you died, but they believe that you had coronavirus, you get incorporated in the number as well. So right there, we know that there's two buckets of people who are being included in the death number that are not actually testing positive or don't actually die from coronavirus. We can't prove it. Now, on the flip side of that argument, right, if you flip around to be intellectually honest and say, well, there's also an explosion of people who are dying at home,
right,
who we don't know. Right. So there's, let's say, 2 to 4 to 6x more people dying at home and not in the hospital. Could those be corona related? For sure. And so, again, it goes back to, I'm not making the argument that we're overcounting or undercounting. What I'm arguing is that the number's inaccurate. And therefore, what we're starting to see is even with an inaccurate number, it's still way lower than we originally thought. So even if you put all of those people in to that number that we have questions as to whether they actually died from coronavirus or not, it's still well below kind of the base case scenario.
How do we get to this after talking about leadership?
Well, because this is the whole thing, right? Why is there not a leader stepping up and saying the data is inaccurate?
What's an example? Who's an example of a good leader in this period of time right now?
I actually think the best leaders right now are the leaders at the local level. Because the leaders at the local level are most likely to have that influential leadership already in place because they have that emotional connection. They're spending time with the people, et cetera.
Do you mean the politicians on the local level?
Well, politicians at the local level for sure are the most likely out of all the political stack. But also what I mean is the small business owners, right? The individuals who are, I have a manufacturing company and I used to make something else, but now all of a sudden we need masks. Great. I switch my operations and I start to make masks, right?
Mm-hmm.
I'm providing value. I'm trying to contribute to the solution. Mm-hmm. What I see a lot of politicians doing is frankly the exact opposite, which is I'm just going to sit up here and I'm going to complain. I'm going to keep saying this data and I'm going to keep pounding the table saying how bad it is.
My problem with politicians is that it feels like, and I've written about this before, how even when they get new information, they rarely change their mind. Instead, what they do is they double down on their original position, even if it's wrong and even if it's bad for the people. So that's what pisses me off. If you wanted to know.
So, all right, there's tons of questions. Leave your questions in here. We're going to start answering them. One of the questions I saw back up here was basically this idea of the Federal Reserve And do we think that the Federal Reserve could just sit and print money forever? The money printer go brr meme I've now turned into is my way of saying it. But essentially what's going on is the Federal Reserve, I think it's now over $3 trillion that's been printed. That dislocation in the stock market I started off talking about is really kind of the stock market is not a representation of the economy. It's a representation of central bank actions. Although the economic data is getting worse, GDP down 4.8%. 30 million Americans unemployed. Instead, what we're seeing is a stock market rallying. That's because the Fed is stepping in and printing so much money. Two schools of thought, and I want to know which one you think is the right school of thought. One, the Federal Reserve is actually doing a good job to stabilize markets and have asset prices recover by acting very quickly, using the 2008-2009 playbook to print as much money as possible. And although there may be long-term consequences to their actions, it solves or at least mitigates some of the short-term risk and issues. That's bucket number one. Bucket number two is you are printing trillions of dollars and you're going to devalue your currency, which will lead to high levels of inflation later. And you shouldn't make the long-term negative trade-off for short-term benefit. What do you think is the right answer?
I'm always long-term, but right now I feel like people, I mean, we went on a run the other day and we saw at a food bank, the line was around the block, if not longer. It's very hard to say, oh no, let the people suffer now because it'll be good for our long-term lives. So I don't know. I don't like the printing of the money, but I also don't like letting the people suffer.
Well, it goes back to incentives also, right? Remember that if you're a politician, you're not going to be in office most likely.
That's true.
10 years from now.
So they're just kind of doing it.
Well, what do you do if 30 million Americans are unemployed, right? You try to solve the problem right now, because even if you can solve for the long-term problem, the short-term problem is I got 30 million people, right? Or however many people in my state or my city that are hungry, without jobs, need help, right? I got small businesses that are suffering, et cetera. And so what I actually think is going to happen is you're going to see the Federal Reserve continue to try to solve this problem. And the number one kind of question in finance right now, if you said to me right now, what is the absolute crux, like pinpoint where the market is being made? It is the question of, will we continue in a deflationary environment, meaning that all of this money printing won't matter because the deflationary environment will suck up that liquidity? That's what happened in 2008, 2009 crisis, right? We never actually saw the high levels of inflation. Or the second school of thought is, will this money printing lead to high levels of inflation? And there is hundreds of billions of dollars, if not trillions of dollars, being bet on that question right now. Is this going to continue in a deflationary environment, or will we see that hyperinflationary environment? They could be sequential, continue right now in deflationary, and then in the future get high inflation. It could be immediate, but that is what every single person is betting on right now in the market. They have some version of that in their investments.
Got it.
What do you think is going to happen?
Oh, God. You don't want me to predict anything.
No? All right. What other questions we got in here?
Does Polina work in private equity? Is it the jacket?
Let's see here. Pomp is a communist. Okay. Yeah, maybe.
But he would make a great first man, I think.
Okay, so the stock market looks forward 12 to 24 months. So things could be terrible now, in 2 years better. This is Dennis Marta. So there's an element of this that people are speculating in the stock market for the future performance. I would argue, though, that most of the speculation going on in the stock market is looking at the economic data and saying it's actually not as bad as we thought it was going to be. Now, this brings up Warren Buffett. Yesterday, I listened to
4 hours.
Yeah, to his 4-hour thing. Some of it I had, without headphones on, so Polina was listening as well. And I was shocked that Warren Buffett, how bearish he was. Now, he wasn't explicitly bearish. He was saying the right things in the sense of never bet against America and all of these things. But as we all know, don't listen to what they say. Just watch what they do with their money.
Or how his cash position's real.
Well, his cash position is definitely increasing. 2, he sold 100% of his airline stake. We'll talk about that in a minute. But also, he hasn't deployed the cash, right? So in 2008, 2009, when things got really bad, he stepped in and provided capital to different businesses. And that was kind of the signal of, okay, there's blood in the streets. Warren Buffett made a move, right? And then there was a recovery. Now, he didn't have perfect timing, but generally that was the thought process.
But he's not.
So when the market drew down 30%, everyone was sitting there and literally people were tweeting and writing articles like waiting on Omaha, right? Waiting on the Oracle of Omaha. What is he going to do? When is he going to move? What business is he going to go pick to save? All these different speculations.
Because this should be his like Super Bowl, right?
Of course, but he didn't make a move. And so yesterday he was asked, why did you not make a move? And he specifically said at one point, he goes, because we didn't see anything yet that is attractive. And I remember the market sold off 30%, but he's sitting there saying that we haven't seen anything attractive yet. And so what I read into that was he thinks this is going to get worse before it gets better, right? And then on top of that, he many, many times kept talking about, we don't know how long this can go on for, right? Kind of alluding to the uncertainty or the unknowns. And so I think a lot of people after yesterday are sitting there saying, wait a second, Warren Buffett didn't make a move yet. If Warren Buffett hasn't decided to jump into the market, this actually may be a negative impact, where we're going to see stocks sell off on Monday and all that kind of stuff.
But how quickly is he known to move when something like this happens?
So he's famous for saying, and I'm going to paraphrase him, but basically he knows within the first 5 minutes of a call whether he's going to do the deal or not.
Really?
Multi-billion-dollar deal, and he pretty much knows pretty quickly if he's going to do it or not. Because again, remember, he's sitting on about $130 billion of cash.
God, right? If I had that kind of money.
$130 billion. And so he can do almost any deal, right? For the most part. And when he's sitting there and he's waiting, and he said that he had some people calling him, but he felt that those people were looking for terms that he was unwilling to do, or the businesses didn't make sense. He was very kind of supportive of the federal bank actions, basically saying they acted quickly. They did the thing that you would have to do in this scenario. And so that probably alleviated some of the pressure for these individual businesses. So they don't need to come to him. But if he does believe it's going to get worse, again, he could say all he wants, never bet against America, never bet against America. But ultimately what he's doing by not participating in the market.
Betting against America?
He's not betting against it. But what he's definitely not doing is he wasn't deploying capital to show that he has skin in the game, that he thinks the recovery is underway, right? If he had instead said, hey, actually what I've done is I've taken $20 billion and I've put it into the market, that would be kind of a vote of confidence. And it's just because he doesn't think that there's a good opportunity yet. Now, the other thing is the airlines. So he, for years, literally decades, has always said that he's not going to go into the airlines. So at one point, there's even a quote, I think back in 2007, maybe he said this, where he said something about like, if a capitalist had been at Kitty Hawk when they did the first flight, a good capitalist would have shut down the plane. Meaning like we wouldn't have an airline industry because it's bad investments, right? And so he's been very bearish on the airlines for a long time. In 2016, out of nowhere, he kind of surprised everyone, and he took a stake in the 4 largest U.S. airlines. Those airlines, he owned between 7 to 10% of each of them. And then all of a sudden, earlier this year, there was rumblings that he was selling his position. And yesterday, he confirmed that he sold 100% of that business. Now, he explicitly said that he made a mistake, right? So he's kind of intellectually honest in that, hey, I made this mistake. But on top of that, what I found really interesting was not only did he sell the entire position, but he was congratulatory and supportive of the current leadership teams, basically saying, I wouldn't want to be these CEOs because this is such an anomaly. Like, how do you actually handle this situation? So I think that we're just seeing that the virus is very unexpected. It's very improbable that it was going to happen. And now companies have to deal with it. And somebody like Warren Buffett, who even though he has a long time horizon, is kind of throwing his hands up in certain situations and saying, this is too uncertain. This is too much of an unknown. I don't want to play this game.
That's interesting because all these people, I mean, you see the stock market going up. All these people are saying it's going to be a V-shaped recovery now that I know what a V-shaped recovery is. So, well, I mean, what's the truth? Like, how do we know what's going to happen?
We don't. And that's where people are making the bet, right? In the sense of you have to take a side. Do you think that you're betting on a quick recovery, a long-term recovery? And it's not so much like black and white, because also how long is your time horizon? Right. So let's say, for example, the stock market sold off 30%. If you're a 20-year investor, as long as you don't think America is going to go bankrupt, you don't think these corporations are going to zero.
What does a 20-year investor mean? It means like I have 20 years before I want to.
Yeah, I basically am making these investments and I'm not worried about having to sell my position
the fluctuations.
Tomorrow. Yeah, I have a really long time horizon. Right. And so when I do that, then I don't necessarily worry so much about the day-to-day price movements.
Sorry, the comments are funny.
What are people saying?
Go on.
What are they saying?
Facial hair needs a V-shape.
I'm going to shave today. Don't worry. Polina's been on me about it.
Thank you guys for saying what I'm trying to, what I'm thinking.
So I think that's one piece of it. The other thing that was really interesting yesterday from Warren Buffett is he was asked, you haven't beat the S&P 500 for a number of years now, right? Why should we invest in Berkshire rather than invest in the S&P? And again, Warren Buffett, part of the reason why people like him is he's so honest. He was like, I actually encourage people to invest in the S&P 500. Well, it's not weird because it's the truth, right? People actually, if you want returns, it would be easier to drive a consistent return in the S&P rather than Berkshire, because Berkshire, again, has so much money, right? It's harder to make a good return on hundreds of billions of dollars than it is if, I think yesterday he said something like, it'd be easier to run $5 million, right? He could double and triple $5 million, but to do it with hundreds of billions of dollars, it's just much, much harder. Before we keep taking questions, go like this video. I keep getting messages saying, tell people to like the video and subscribe to the channel. All right, what's the next question? You have any?
So I saw one. What's your view on the halving?
On the halving? Oh, Bitcoin. So on the macro backdrop, actually, hold on. I want you to say what you think it is. Polina's heard me say this a million times. Can you repeat the?
Wait, what Bitcoin is or what the halving is?
One, what is Bitcoin?
Well, then I forget. Bitcoin is an asymmetric, non-correlated asset. What else is it?
Well,
it's not a real coin.
It's a decentralized digital currency. Okay. Do you know what the halving is?
So the halving. So there's 21 million Bitcoin right now. Total ever. And the halving is going to cut the supply. So there's not going to be incoming daily supply. The incoming daily supply will be cut in half. So the demand will explode, but the supply will shrink. That's
directionally pretty good. Yeah, pretty good. So basically right now, 1,800 Bitcoin per day are produced. It's very programmatic. It's very transparent. In about 9 days, give or take, there's going to be a 50% reduction in that daily incoming supply. So it'll go from 1,800 to 900 Bitcoin. Obviously, if you understand supply and demand economics, kind of economics 101, if supply gets cut and demand remains constant or increases, there should be a material increase in price. And so I generally think that there is a supply shock coming, obviously, right? There's going to be a reduction in the incoming daily supply, 50% reduction. But I also think that there's a demand shock underway, right? People are realizing that there's the potential risk, right? Not guaranteed, but potential risk that inflation could occur. And therefore they're running for asset that has inflation hedge-like properties. And then there's the accessibility question. So if I'm somewhere in the world, all I need is an internet connection to get access to Bitcoin. To get gold, maybe a little bit more difficult. To get dollars, maybe a little bit more difficult. I need a bank account, things like that. And then also what we're seeing on top of that is in certain areas around the world, take Lebanon, for example. In Lebanon, the Lebanese pound, we've seen lose over 50% of its value, right? It continues to fall. And I want to spend a second here because I think that this really highlights the benefit of Bitcoin in Lebanon. And Polina, her family actually saw something similar to this in Bulgaria back in the day. But if you think about what's going on in Lebanon, so you've got people who were protesting. They were, kind of anti-government protests. Then all of a sudden the virus occurs. They say, go inside. So everyone goes inside. The currency continues to fall in value. And that has impact in two ways. One, all of a sudden my pound buys less goods. So that loaf of bread that was, let's say, 5 pounds is now 7 pounds, 8 pounds, 10 pounds. So the food prices rise, but not because the food value is changing. It's because actually the currency is being devalued, right? So I need more of the currency to buy that. So everything around me is getting more expensive. The other thing it does is it makes my savings or my wealth less valuable. So if I had 100 pounds, all of a sudden now that same 100 pounds, the number didn't change, but what I can buy actually changes. And so I'm actually not as rich as I used to be. And so what do people want to do? They want to get out of the currency. So they go to the bank and they say, hey, give me my money back, but don't give it to me in this currency that's being devalued. Give it to me in US dollars, or give it to me in the euro, give it to me in some other currency. The banks recently said, we are not going to give you any other currency other than the Lebanese pound. Now, on top of that, what they then said was, you can't take out more money than X. And I don't remember the exact amount, but they started to put capital controls in place. So you couldn't withdraw a lot of the money and you couldn't withdraw it in any other currency. And so it locks people into that currency. And what they're doing is when they go to sleep, they wake up the next day and literally their wealth is evaporating and everything around them is more expensive. So what that then means is they're getting paid in their salary, right, or their hourly wages, and that is not changing. It's not like all of a sudden that same pound that I used to get can buy the same good, so just keep paying me the same. I'm actually now making less and less. So maybe you want to tell a story about your dad?
Yeah, basically, this was in, I think, the 90s in Bulgaria. There was some sort of, there's a lot of inflation, and he was working for, let's say, $300 a month, and all of a sudden his salary went down to like $3 or 30 cents or something ridiculous. So he stopped going to work.
Well,
he's like,
his salary didn't change.
Right,
the value of what the US dollar equivalent went from, $100 or whatever it was to very, very little.
But what I thought was interesting that he said was, it's kind of like common sense. If you're getting paid 30 cents to go to work and do the same job, would you still do it? Probably not. But he said that a lot of people still kept going to work day after day and working for nothing because they were scared to lose their position.
Well, it's a social construct, right? In that twofold. One, you're being told that it's going to get fixed, right? So there's a belief that, hey, a solution is coming. So some people buy that narrative. And then the second is it is a rebellious thing to stop going to work, right? There's a sense of your neighbors are going to judge you, right? Or what else am I going to do? Or my family's going to say, you quit your job. Why are you not going to work, right? You've abandoned your work. So there's that element to it. But in these situations, people want to get out. So what that leads us to then is an access problem. They want dollars. Dollars are right now valuable. They're stable. Comes with the full, faith and credit of the United States. All of these benefits. The problem is they're hard to get. So in Lebanon right now, it's hard to find, and there's probably a black market going on. But it's dangerous, right? How do you know that you're not going to show up to buy some dollars and somebody doesn't literally shoot you or stab you or rob you? Do all this stuff, and then how do you determine the value, right? The official exchange rate is different than the kind of unofficial or black market exchange rate. So that's the problem with dollars. Gold, there's a shortage of these precious metals around the world, and they're actually trying to fly them to places and help do that. But with Bitcoin, all you need is an internet connection. You literally can get on the internet, sign up for an account in all of these various platforms, and you can buy Bitcoin and hold on to it, and you don't have to worry about only finding it somewhere locally around you. You can literally use the internet to get access to a currency that then also can't be seized, right? And so I think that slowly but surely we will see country after country after country go through similar situations, and we will see people start to realize the value of a decentralized digital currency. I
know you've said that this can't happen in the US, but why not?
It's not that it can't happen. I don't believe it's going to happen in the short to medium term. There's three things. So one is there's a guy, Brent Johnson, Santiago Capital in San Francisco. He's got this theory. He calls it the dollar milkshake theory. And the dollar milkshake theory basically says central banks around the world are pumping all this liquidity. They're all printing money and they're throwing it into the global financial system. As they do that, what ends up happening is that all of that liquidity is going to move and be sucked up into one asset, right? That one asset being the US dollar. So the US dollar is going to continue to gain strength over time because all that liquidity flows to the dollar. And so the whole idea is central banks are making a milkshake by putting liquidity in, and the dollar has a straw and it's sucking it out. So dollar milkshake theory. Now that would put the US dollar continue to actually strengthen and have a deflationary environment. So it sucks up liquidity that the Federal Reserve puts in. The second thing is that we are one of the most disciplined countries in the world when it comes to monetary policy. What do they say?
No, you don't want to read that one. Guys, you guys are wild.
All right, chill out in the comments. But the second thing is the U.S. is one of the most disciplined countries, right? So if you look at something like Venezuela, for example, how did they get to the point that they get to? They became undisciplined in their monetary policy. And so because of that lack of discipline, you get hyperinflation, you get all these negative effects. That's obviously in the United States, we're pretty good about it. And people have to go back and understand in 2008, 2009, there was a lot of these same concerns. People were worried about hyperinflation. They were, oh my God, we're printing hundreds of billions of dollars. We never saw those high levels of inflation because we were already in a deflationary environment and was able to suck up all that liquidity. Now, on top of that, inflation hedge assets did very well. So gold, even though it went down 30% in 2008 over the summer during the liquidity crisis, it still ended up going up about 200% after that and hit an all-time high. Right. So I think those types of assets will do pretty well. Make sense?
Cool.
All right. What else? Any other questions in here?
I was keeping an eye.
Did you see any good ones?
I saw some inappropriate ones, but hold on.
Let's see. Everyone loves Polina. They love Polina.
What's not to love?
Oh,
what's your favorite book?
My favorite book?
I like this question.
What's your favorite book?
Oh, I gotta think.
I have 4 books that I'm going to recommend.
Okay, you go recommend them.
Guns, Germs, and Steel.
Oh, that was a good one.
Jared Diamond. Rich Dad, Poor Dad by Robert Kiyosaki.
Yeah.
The Richest Man in Babylon. And Think and Grow Rich, Napoleon Hill. Those are the 4 books. If you read those 4 books, you will be ahead of the game when it comes to the world and thinking.
Are we talking like inspirational books?
No. What's your favorite book?
Ooh, I don't know. I have a lot.
What are some of the best books you've read recently?
Best books I've read recently. I've been reading a lot about. Okay. I'm just gonna recommend one. It's not my favorite, but I think it's good to read right now. It's called The Geography of Bliss.
What is that? I hadn't even heard of that.
Well, so it's this reporter who was like covering war zones and he got super depressed. So he decided to look at this list of like the top 10 happiest countries in the world. And he was like, what the hell makes them happy? So he went to them and he wrote, it's a really humorous account of the way people act in certain countries. So he goes to like Switzerland and Sweden, and I think he goes to one really sad country, Moldova, I think. But anyway, the way he writes about it is really interesting. And right now I know a lot of people can't travel, but it's just a good way to get your mind off of what's happening.
Tell them what you told me today about traveling and the whole idea of like seeing other places and how it changed your mindset.
Oh yeah. So the reason I like traveling is because it lets you see new places with fresh eyes. Like I was telling him when I first moved to New York, I remember how I was like, whoa, everything was new and cool. And now I try to recreate that feeling, but I've gotten used to New York. So when you go to new places, it's kind of cool.
I agree. I think the exposure to other societies, cultures, and economies, it just gives you a much better perspective when evaluating various situations.
I read, someone wrote this, I forget who, it was a travel writer, but he said it rearranges your cultural furniture. So you kind of like, you've built something in your head, this like mental model of how the world works. And then you go to a different place and it's just completely, do you remember we went to Bali last year? And I thought it was really cool. Now that I think about it, our guide told us that basically in every community, they all live wherever you were born in whatever house, you kind of stay there your whole life. And let's say you get really rich during your life, you don't go move to a rich neighborhood. You stay in the same neighborhood. Maybe you build a bigger house, but you're still there. And it's kind of like, it's this idea that the rich and the poor live in the same places. They don't segregate kind of like we do here.
I agree. People want to know your hometown.
Sofia,
Bulgaria. All right. 2 other questions that are in the comments. Let me do first the digital currency, and then people are asking about real estate as well. In terms of digital currency, so the questions basically are about this idea: if nation states come out with their own digital currency, so a digital dollar, a digital euro, digital won, digital yen, etc., what does that do to Bitcoin? I've said a number of times that I do not believe that we are going to see a competition between at the technology layer. So it's not going to be a digital currency versus a non-digital currency. I think the kind of obvious conclusion is that 100% of currencies will be digitized. So we will have a digital dollar, digital euro, Bitcoin, stable coins, all this stuff. Where the competition is going to occur is at the monetary policy layer. So every currency will be digital, and then you will have various monetary policies. So if you think about from a market perspective, accessibility goes to 100%. Anyone in the world can now access any currency in the world because of them all being digital. Now you get full on competition at the monetary policy level. I personally believe that people will choose to seek out a non-inflationary asset, especially one that is non-sovereign and one that is decentralized. And so if you look at this, let's go through the game theory of, let's say at the country level, right? So if I'm in a whole bunch of reasons why we would do that. I think we might have just lost people for a second, but we're good. And so people basically then would have to use the dollar. Instead, now what will be available is we can use a digital currency. I think that people are going to enjoy and seek out the transparent nature that Bitcoin provides because they know that nobody is manipulating it. They know exactly what is happening. And so in those situations, I think over time, it won't happen in the short term, but over a long period of time, people will just naturally opt for this transparent, decentralized thing that can't be manipulated.
Can I play devil's advocate for a second?
Of course, you can do that in your Canadian tuxedo. Go ahead.
You guys, I'm wearing Nike shorts. Okay. If what you just said is true, why haven't we seen an explosion in the price of Bitcoin during this time?
We have.
Has it?
Bitcoin is up 25% year to date.
Year to date.
So at the beginning of the year, it's up 25%. Over the last year, it's up over 100%. No. Hold on. It's up over 100%. And Bitcoin is the best performing asset over the last decade.
I get that, but it has not increased in a dramatic way as you would expect in a time of crisis like this.
There's two pieces to this argument. So one is you could make the argument that it being up 25+% year to date it's been 3.5 months, right? Like it's not like there's been a long period of crisis. 3.5 months since the beginning of the year to now when COVID really kind of started to when it hit. So being up 25%, it's the best performing asset. It's done better than gold, better than stocks, better than treasuries, everything else. It's outperformed. The other argument would be that people are like, wait, there's trillions of dollars being printed. Why is there not all of a sudden an explosion like it doubles or triples in price, right? And I think that's what you're asking. That's just not what happens, right? And what I mean by that is there's no asset in the world where all of a sudden everyone at the same exact time makes the decision on the same day and moves over and all shift their wealth into something else. Okay. Even in these countries like Lebanon, et cetera, we're talking about the structural issues. Majority of the population is still using that currency. It sucks because it lost value, but even though their currency is getting hit even harder than people think the US dollar could get hit, people still don't leave because one, they're not paying attention. Two, they don't know how to do it. Three, they don't care, right? Like there's all these issues to it. So what I actually believe ends up happening is go back to gold in 2008, 2009. In the liquidity trap or the liquidity crisis over the summer of 2008, gold went down 30%. Everyone wants dollars. Everyone sells every asset in that liquidity crisis. Bitcoin wasn't safe from that, went down 50% one day. Gold went down 12%. Stocks went down 30%. Everything got sold. Now what we will see is kind of this march back into assets. I think over the next 18 months, you're going to see Bitcoin make a material movement in price. Some of that is related to the halving. Some of that is related to kind of naturally people just discovering it and understanding it and wanting it. And then a lot of it is related to the Federal Reserve actions. So it's kind of like we're at the beginning of this and you can't really evaluate the performance of an asset in the first, couple of weeks of a crisis. You almost have to wait till you have the hindsight bias. And then you can say, this performed well, this didn't perform well, right? Because think about 3 or 4 weeks ago, when stocks were down 30%, you could have been like, oh my God, stocks are selling off. It's crazy. Now you're like, wait a minute, they're only down 10% for the year, right? So like, it's really not that bad, if you will.
This is a good question. Polina, are you worried that Pomp has over 50% of his net worth in crypto?
What do you think?
So we always talk about every time.
Tell them our strategy first.
So I own no Bitcoin. I wanted to one time, but then I didn't. I invest in the S&P.
Well, Polina, so our whole strategy is there's two people here. And if you think of a barbell, I take like 99.9% of the risk. She takes near zero risk. And so we both have very, very long time horizons. We're relatively young and we're able to continue to allocate capital on that long time horizon. I have obviously a very material percentage of my net worth in Bitcoin. I hold a decent amount of cash. And then I have real estate is kind of the third biggest bucket. And then on top of that, I have a number of kind of private company investments that are high risk, high reward type stuff. Polina, on the other hand, is basically cash and S&P. And the thought process is if you look at the two of us.
Cash.
You like cash?
I like cash. My cash position so big.
Are you alluding to me calling out Kevin O'Leary?
Yeah.
All right.
There's a great video of Kevin O'Leary being like, 50% of your net worth in Bitcoin? I forbid it.
I forbid it.
And then what did he say?
Well, it's two different segments, but yeah,
sorry.
on one of the segments, I said they asked me, Bitcoin's backed by nothing, and even though I disagree with that, I said, but neither is the U.S. dollar, and how big's your cash position?
What did he say?
Let's go to commercial, and they just cut away. But I think that our whole thought process here is we're actually very kind of risk averse in the sense of how we look at kind of allocating funds across the both of us. The second thing is from a Bitcoin perspective, it would be nice, or it would be kind of a cool gesture if Polina owned a Bitcoin. Maybe we'll get.
It'd be a cool gesture.
Yeah, just in the sense of like our Bitcoin exposure across both of us. I'm taking that risk. So there's really no need for her to own one. But at the same time, maybe we'll get you one so that you can say you own Bitcoin.
I don't want to say. Do I want to say that? I don't.
Do you like saying you don't own Bitcoin?
I don't want people to say like, "Oh, she's a crypto bro," because I'm not. And if I own one, I'll become that, and I can't.
You can't. Then you'll talk about Bitcoin all the time.
I'll literally look at like the daily fluctuations. I'll be like,
oh, so you'll be a degenerate on Twitter with everyone in the comment section. All right. The other thing is I saw a bunch of questions in here about real estate. So let me do two things. Let me first kind of talk about what we've done in real estate already, and then I can talk about what we're looking at now. So currently, the pieces of real estate, we own a little bit of residential and also a little bit of commercial. The commercial real estate is obviously commercial, but it's somewhere where we went in, bought a piece of property. We had a business already in mind that was going to go ahead and take that property, and they locked into a long-term lease. That's going very well. Their business is still doing very well. We're not worried about anything there in terms of their ability to pay. And so the commercial side looks great. On the residential side, we've got a very small number of residential pieces of property, and those are fully rented out, 100% occupancy. Everything there looks good. It's remaining profitable. And so we kind of don't have any concerns. Now, I am getting very excited about the real estate market. I think that the two big things that we're going to see is one, we're going to see a massive sell-off in commercial real estate, both here in New York City and elsewhere. The way people work is just going to change. So there will be somewhat of a shift to more remote work. But on top of that, I think that you're starting to realize, business owners are starting to realize, wait, maybe we don't need this much space. Maybe we don't need this many employees. And so they're kind of getting the ability to reset. And I think that'll have a material impact on prices in the commercial space. So looking at that. And then on top of that too is people are always going to need somewhere to live. And so on the residential side, we're taking a look at a number of pieces of real estate, not so much looking at things that had been on the market previously, really looking for situations where either one, life events are driving people to want to sell. So there's somewhat motivated sellers and really looking for not necessarily giving away the property, but definitely kind of open to taking a little bit less capital than they originally wanted because of those life events. And the second bucket is there's definitely people who are kind of caught in this liquidity crisis. They need liquidity. And so trying to find a balance between you don't want to be the shark. You don't want to go in and kind of screw them over. But at the same time, when the market's changed and there's kind of blood in the streets, you want to be able to be there to act.
Somebody or a few people are asking about residential real estate. Will there be a sale?
I definitely think we're going to see three major trends, or maybe they're not major trends, but three trends that are going to kind of play out over time. So one is that I think a lot of people are going to start to realize having a strong balance sheet really matters. And they probably have big mortgage payments and kind of the financial position that they're in right now.
Strong balance sheet, meaning they have a lot of cash?
Meaning they have more assets than liabilities. They spend less than they make. They save. They've got like their financial shape. They're in a good, strong position.
Go on.
And so what I think you're going to see is over time, it won't happen immediately, but over time, you're going to see people kind of downsize their homes. They're going to realize maybe I don't need this big mortgage payment. So that'll happen over a period of time. The second thing you're going to see is there's a lot of people who can't afford their mortgage right now, right? And so you're going to see foreclosures and kind of everything, the washout of people not being able to pay, which is very unfortunate. And that's kind of why we got to get people back to work in a safe manner. But I definitely think you'll see that. The third thing that I think you're going to see here is you're going to see a migration where people are going to say, look, I live in New York City. Why do I live in New York City when I can do a lot of things digitally? Maybe I don't need to pay so much money for an apartment. I could go spend that exact same amount of money living somewhere else and buy a bigger property or a bigger piece of real estate. And so those three things I think are going to, What?
just keep going.
Are people telling you to hit me? Hey, Steve B, I see you saying flick Pomp's face right now for no reason. See what he does. I appreciate it. So I think that basically what ends up happening is residential real estate is going to look different. And you're going to see two things. Is certain markets are going to get hit hard and they're actually going to suffer. Certain markets are going to become hot and they're going to benefit from this. What I'm specifically interested in is looking at markets that I know. So North Carolina is a market that I know. New York City is a market that I know. And looking for kind of these very special situations. And the reason why I say special situations is there's kind of down the fairway deals, right? Basically, if you screw it up, you're going to make money, but they're not necessarily grand slams, right? The piece of commercial real estate that Jason Williams and I bought is a grand slam deal, right? We're going to make a decent return on that, and it was fairly simple. It was very obvious that we should do that deal as soon as it was presented to us. And so I think that's really what I'm looking for here. Is I'm not going to take a lot of swings. But when we do swing, I think we're going to look for a couple of grand slams. And really that's either based on the price that we're buying it at, right? Kind of the return that you drive is based on the price you buy, or two is the type of real estate that we buy. So even if we pay kind of a market price for it, just something that doesn't come up for a trade very often is something that we'll be looking for as well. So that's kind of the thoughts on real estate. If you got real estate that you want to sell, please let me know. I'll definitely take a look at it. But we are definitely looking for real estate.
What stops the government from simply banning, owning, trading cryptocurrencies once they feel they might pose a threat to their own currency? Would that not essentially end crypto? I ask this question all the time.
If one country bans it, another country will open it with wide open arms because no one can stop it. So it's not like, let's say, for example, go back to the days of music. If you guys remember things like LimeWire, Napster, et cetera, it was supposed to be quote unquote P2P, right? File sharing. But at the end of the day, there was a company that owned it. There was somebody who was in charge of it, and they could go arrest that person. They could go shut down that company, put down the servers, whatever. In this case, even if they said in the United States it's banned from ownership, you cannot own cryptocurrency. Then what would just happen is Russia, China, India, all these other places around the world, like, here's our opportunity. Here's how we get off the US dollar. The US has now banned this. If we go ahead and we embrace it and we do it together, then that will drive the adoption and we'll move off the US dollar system. So I think that there's kind of this game theory at play where unless you had full global coordination among all superpowers to ban ownership and also to work to shut down all of the miners, I just don't see them being able to do it because whoever acts first to do that will end up being on the wrong side of the trade because their adversaries in the economic world will end up embracing it and benefiting from them having taken that action first.
There was a question here, this one. If the point of Bitcoin is to be your own bank, doesn't BlockFi defeat the purpose by giving a third party your Bitcoin?
So there's two things, right? So one obviously is, yes, Bitcoin gives you the ability to be your own bank. By no means do I think, Zach Prince, Flory at BlockFi, myself, any of the other investors, or any of the employees there think that people should go put 100% of their Bitcoin into BlockFi or any other service, right? Any of these services. At the same time, the way that I think about this is actually a really important point. So I do not look at Bitcoin in US dollar terms. I couldn't tell you how much Bitcoin I own in US dollar terms. What I do know is how many Bitcoin I own. And it's because I've switched my mindset to a Bitcoin denominated world. So Polina can tell you the story of literally when we moved into our last apartment, we didn't have a couch for like 2.5 months because I was sitting there and I was saying, I'm not going to spend X Bitcoin to buy that couch.
I was drinking wine on a yoga mat in the middle of the living room.
I've atoned for my sins. I was wrong. But at the time, Bitcoin was very, very low. And I was looking to acquire more Bitcoin, not spend Bitcoin. And so the thought process is I just denominate everything in Bitcoin and not in US dollars. And so the same thing with something like BlockFi is I would like to earn a return on some of my wealth. And obviously, Bitcoin itself can go up or down in price. So there's some price appreciation or depreciation there, but you can also earn interest. And so what I do is I take a very small percent of my holdings and I put that in as a user of BlockFi to earn on their interest-bearing account. Now, it's an amount that, one, if I lost it all, I'd be comfortable with that. Two, I've done my research and I'm comfortable with the risk that I'm taking at BlockFi. But on top of that, I also think that the amount of interest that I'm earning is commensurate with the risk that I'm taking. right? And so right
What
now,
words are you using? Go on.
that's the SAT word for those of you
I
keeping
don't
track
think
at
you
home.
said it right.
And so if you think of BlockFi, for those that don't know, you can go to blockfi.com/pomp, blockfi.com/pomp to check it out. You can earn 6% interest or 6% APY on your Bitcoin, and you can earn up to 8.6% APY on a digital dollar. So before we leave, I want to leave you guys with this. A lot of people ask me all the time, what is like one of the best trades or investment ideas I have right now? I will caveat all of this with, I'm an investor, a user, and BlockFi is a sponsor of the podcast. So I'm highly, highly biased here. But I tell this to all of our institutions. This is the conversation I have behind closed doors. If I was somebody who had a amount of cash sitting in the bank, what I would do and what I have done is I would take a portion of that cash, I would deposit it into a digital dollar. I would take that digital dollar and I would put it into the interest-bearing account on BlockFi and earn up to 8.6% APY. Now, why would I do that? One is I'm not taking price risk, right? It's backed 1-to-1 to the dollar. So when I put my US dollars in, those dollars go and sit at State Street in a cash denominated account. So State Street has custody of my dollars. I'm issued a GUSD or USDC, right? So let's say GUSD. So Gemini issues me a digital dollar that's tied 1-to-1 to the cash. I then take that digital dollar and I deposit it into an interest-bearing account that pays me 8.6% APY. So I recently tweeted and said, while the stock market's crashing, I would be earning a guaranteed 8.6% APY at today's rates by simply having cash sit in there and earn interest. It's a higher interest rate. And the reason what they're doing, how they're able to pay that, is they're taking my digital dollar and they're lending it out, right? Just like when I put dollars in my bank account, the bank takes those dollars and lends them to other people. They earn, let's say, 2%. They then pay me literally 5 basis points, 0.05%, right? And they keep the difference. What BlockFi is doing is I'm depositing digital dollars. They're taking my digital dollars, they're lending it out at very high rates, and then they're getting paid that high rate, and they're giving me 8.6% APY on my money. So it's a way to earn very high degree of interest without taking significantly more risk than you're already taking in your bank account. Now, one of the differences is that you don't have FDIC insurance on the digital dollars, right? You do. State Street obviously has insurance on your cash, but there's some risks there.
Wait.
Go ahead.
What?
What?
It's not FDIC insured.
So your cash, the US dollars that you deposit, they go sit in the State Street account. That account has insurance on it because it has regular US dollars, right? Just like when you have it at your bank account, under 250K has FDIC insurance. What Gemini then does with GUSD is they give you a digital dollar back in return. That digital dollar is backed 1-to-1, right? You can see an audit of your, hey, they have my $100, I have 100 GUSD. That GUSD, when I put it into BlockFi, does not have FDIC insurance.
Right.
So there is risk, right? And that's why I say people need to go do their own research. But again, I don't go do this with all of my cash.
I'm just here.
But the reason why
I'm just here for the risks.
but the reason why I believe that this is interesting, right? And we invested in the company and I'm a user is because I believe if you size the risk correctly in your portfolio, earning 8.6% on cash, you can't do that anywhere else. So for example, what we tell institutions is if you're really kind of forward thinking, take 5% of your cash position, go do this. And even if you keep earning, 50 to 100 basis points in your money market account, that 5% can materially increase the total return on your cash, right? So you can basically size it correctly where your downside risk is you would lose 5% if everything went wrong, right, but you're getting 8.6%, it moves your cash position up. So if you guys want to learn more about that, go to blockfi.com/pomp.
Is that a code?
It's just a website where it has all of the information. They know that I'll send people to that exact website that they use for the podcast. So go check that out. I don't want to spend too much time talking about that, but that is one thing that I think is really, really important. And it's kind of one of my better ideas in terms of that. The second idea, obviously, is I think Bitcoin's going to be the best performing asset coming out of this financial crisis. And the third thing that I'm doing personally is I am looking at a lot of real estate. I think real estate will be quite attractive. I own no public equities. Polina owns the S&P, but we don't speculate in the public markets in terms of buying individual stocks or really have an opinion about individual price movements, unless you have some.
I have no opinions on individual price movements.
This is not advice, but I'm interested in your answer. This is not advice. Do not listen to what she says. She knows nothing.
I know everything, but don't listen to me.
No, that's a disclaimer.
I got it.
I know nothing either. if you had to buy only one stock right now and hold it for 10 years,
I'll get in trouble.
No. What, just like, what was the one stock that you would go look at, right? That you would say, hey, you know what? I think that this company is going to do really well over the next 10 years.
Something like Coca-Cola or something.
Why Coca-Cola?
Because Warren Buffett drinks it, and also I like it, and also this
is bad logic.
No, listen, it's a company that has stood the test of time. Is that not a good reason?
So like a Lindy effect of the longer something persists.
I know what that means.
The longer something persists,
Do you know what
the more
that
likely it is.
Oh,
yeah. People are commenting that you're attractive. I agree, obviously.
Thank you, guys. Somebody said they would invest in my smile.
I'd short that for sure. All right. So yes, we will continue to make videos. We really, really appreciate everyone watching. Before I forget, go like this video. Go share it, leave a comment. We'll do our best to go answer as many comments as possible. But please like and subscribe to the channel so we can keep doing this and grow it. Put a ring on it. I already did. For those that don't know, we should have said this in the beginning. Polina is my fiance. So that's why she's here. I hate the Red Sox. Heavy into VIX right now.
You're like blurring them. You gotta like put space between your words. I can't keep up like that.
I'm just saying. How about ICE exposure to stock market and crypto? Look, they definitely have exposure to the stock market and to crypto. I don't know if they're necessarily a great stock to vote or not. We will not be broadcasting our wedding.
Oh man,
that is not going to happen. Polina, you are 90% of my portfolio. Polina is basically 100% of my portfolio. I'd give up every dollar that I have in order to keep her. So that's probably pretty good.
Guys, we do one of these every day where I'm like funnier because today I just didn't feel like discussing your Bitcoin stuff. But we do lunch money every day around noon.
That's true.
On YouTube.
Let's see what else. Literally, I can't keep up with all of these comments you guys are putting in here. Polina is very attractive, and she's ignoring me and my questions too. Well, Tapa Rob, I just responded. No shout outs. Let's see. What's my second biggest holding after Bitcoin? Cash. I guess real estate technically on a value basis, but in terms of liquid investment, cash. It's so funny
how like people use all these big words like I have a cash position. Why don't you just say I hold cash? Like I have cash. Why does this have to be a position?
Well, because I think of it as it's like a pie chart and what percentage of it is in cash versus Bitcoin versus something else.
Okay, in my wallet, I got cash.
Do you guys see what I have to deal with? All right, what else here? Ethereum. Okay, let me touch on Ethereum, and then we're gonna go. You can ask a couple more if Polina sees one, then we can we can
answer. They're going so fast.
I know. So on Ethereum, look, we should encourage experimentation. We should encourage innovation. I think that there are certain aspects of what people are doing there, like decentralized finance, that will be interesting. I ultimately believe, though, that you need sound money to make any of it work. I do not believe that Ether is sound money. I do not believe that ETH will serve as money over any significant period of time. We have made investments, right? So don't listen to what I say. Just watch what we're doing with our capital. At Morgan Creek Digital, we have made investments in companies that are building on Ethereum, that are using the various aspects of Ethereum. So obviously, we think there's value there. But when it comes to kind of Ether specifically as money, I just don't see it. I think that the narrative has shifted quite a bit over time. And so, we'll see what happens there. But obviously, the use of smart contracts is interesting. DeFi, I think, is very interesting. The question just becomes, can you build it without the sound money principles of
Is
Bitcoin?
DeFi decentralized finance?
Yes. Got a genius on my hands. All right. What else? Anything else?
We should do one of these where we ask the people questions and they answer.
No, I don't want to. No, that scares the shit out of me. All right, guys, listen, okay. I appreciate you guys watching this. Please like this video. Make sure you're subscribed to the channel. If you want to share the URL, that'd be fantastic. If you leave a comment, Polina and I, whether it's healthy or not, we read every single comment. And
it's not healthy.
And we try to respond to almost every single one. If you're an asshole in the comments, we're not going to respond to you.
Do you want to tell them one time?
What?
When I cried.
One time somebody said something really mean and Polina cried. We're not going to say what it was.
No, it was. No.
We're not going to say what it was, but somebody said something very mean and Polina cried.
But
It was one of the first times she ever went into the internet
I-
section or the comment section of the internet. And I had to explain to her that you can't take it seriously. You got to have thick skin.
But I'm desensitized now. You could say whatever you want. Won't hurt my feelings.
All right, guys. We appreciate you guys tuning in for the last hour or so. And we will see you guys tomorrow for Lunch Money at noon.
Bye.